This is a chart of Apple stock over a recent 6-month period from August 2010 to February 2011. As a strong growth stock, you would have done nicely if you owned it during the 6 months under discussion. Even if you aren't a chart reader, you can tell this stock went up during the time in question, and if you were invested in it, you would have made money. A quick calculation shows that the profit for the period was $100. Of course, in order to get this profit, you would need to buy exactly at the low and sell exactly at the top. Doing this is not always easy. How many of us can really do that? Not many, and that includes us. We will calculate our percent gain by dividing the amount of money we made by our cost. Simple. We made $100 and we paid $240 for the share we purchased. That's a gain of 41% for 6 months. Most of us would be really happy with a gain like that after only 6 months. But here's the good news. With just a few hours a month, without making it a full-time job, and no sleepless nights, you can do much better. How much better? You could have made 203% using the same stock and the same time period with just a few more hours of effort each month. Just invest your money like pension fund managers, bankers, and mutual fund managers do. It's not hard, it's not complex, but it requires a little education. An education that you will get with our video CD course. Here's how we would approach the situation. We would place several positions over the 6-month time period. We will do one at a time, which would take separate actions for each position, and each position would end before the next one begins. We make money as long as the stock value does not enter the area limited by the lower box. For clarity, each position and order cycle will be shown by a different color. If you bought on August 1st and held the stock until the end of February, you would have made 41% if you timed it perfectly. We made 35% in the month of September, and the best part is our timing didn't have to be perfect. The second position is placed the week after the previous position concluded. We are in only one position at a time. Notice that the profit rate stays about the same even though the stock price moved higher. We use the same money to place the second position as we did to place the first. So we have done a little work in September and a little more in October, and we are already ahead of the typical stock purchase. And it's safer. In the month of November, the stock price went down, and we still made the same approximate profit. We are still using our original funds, but we could be increasing our position size if we wished by adding our previous profits to our original capital. Or you could spend the profits, or save them to grow your retirement account. December found Apple going sideways and we still made the approximate same profit. January was choppy and we still made our money. Apple actually went down significantly in February. That surprised a whole lot of investors, but guess what? We still made our typical profit. It's clear to see that we make money when the stock moves up, moves sideways, or even moves down. You could be doing this yourself if you take our CD course. Now let's look at some variations to the same technique that allow this strategy to be customized to your specific risk temperament. We'll look at the month of December again. This is the way we would recommend setting up the trade in our trader's advisory. The red arrows show a comfortable margin between the stock price and the position parameters. But suppose you're more conservative than the average and want less risk. To make this a more conservative trade, we would move the parameters of the position so that the gap between the current stock price and the transaction parameters would be larger, as shown with the gap of the red arrows. Your profits would be a little less, but the transaction will be less risky and have a larger probability to complete successfully. And 18% a month is nothing to sneeze at. If your temperament allows you to take a larger risk, you could adjust the position so that the current stock price is closer to the transaction price. The distance between the red arrows is now very small. Notice by moving the transaction closer, our profit goes up substantially. We won't discuss how risk is determined here, but please accept that this transaction is a little riskier than the two just discussed. The important point is that we will show you how to control your risk and rewards for every transaction. You will learn how to adjust any strategy to your own temperament. If you want less activity, you can use even longer time frames. This usually equates to slightly less profits on an annualized basis, but still would generate very nice returns. Be less active and still generate nice profits. We will also teach you how to deal with unforeseen market conditions automatically, without constant monitoring of your positions, like when you're at work. These choices are basically variations on the same strategy. They all have one common thread. They remove the feeling that you're on a roller coaster ride and place you in charge of your investments. Here's another variation on the same strategy. More frequent activity using weekly options. A relatively new tool, we use them very often. They make almost as much money as the monthly options, and they allow you to control your risk even further. A second major feature is that they allow you to get your timing down much more accurately. The final gains for a month using weekly options can be very high and still be low-risk conservative trades. This set made 93% for 1 month. What we do is take the risk and uncertainty out of the market. You will know your exact cost for every position before entering it. You will know your maximum risk or loss potential for every transaction before placing the trade. You will know the exact profit you will make before entering any position. You will not be required to make high-stress decisions while you're in the trade, hence the name low-stress trading. Knowledge is the key to success, and you will get it in a clear, easy-to-understand format. Our course is 21 chapters of information that will give you the equivalent of a college education in making money. We don't do high-risk trading, and we don't do day trading. In 3 years, we have never had a losing month. Take action now. You can't start making money until you take the CD course. Thank you for listening. Go to the prices page and sign up now. You won't be sorry.